All right, hey there, guys. Sam here with a quick video update here. We get a lot of requests, people asking about the market structure indicator. It's been a very popular indicator on the Ninja platform here, and I've been in some dialogue with some customers and members that have made this investment, and I see a pattern, a recurring pattern amongst them, and it's reasonable to anticipate that many make similar kinds of miscalculations, or we can call them trading errors, if you will. I think often, because this indicator has so much in it, I'm going to go over to a 4-hour here and start here. There's so much in it. If we look at the drop down, there's so many things I can add in here. It's easy to overcomplicate it, and I think what you want to try and do, particularly when if you're not profitable with this and you're kind of struggling, like you can see it after the fact. But in the, with the emotional context of the reality of trading in real time, it's easy to make a few mistakes. It was certainly over trading, probably one of the most common, and it's an easy mistake to make, right? It's easy to see something on the lower time frames that make you think, okay, I recognize this. There's an opportunity. But if I were just to narrow it down to one simple idea that is a common error or miscalculation amongst market structure traders, it's not referencing the higher time frame. See, it's easy to get caught up in the lower time frames and go, what do I care about what just happened in the 4 hours ago? But it really frames the day for you in a way that you want to be sure that you're clear on. For example, right, as we're sitting here, it's 2 o'clock now on Monday. Now, we all know, anyone trading today, Monday, often a chop day, right? Unless there's news behind it that came from the weekend. We've got Jackson Hole hanging over the market, so it's likely to be potentially lots of chop this week as the market awaits, some sort of signal from the Fed as to how aggressive they're going to be on rate cuts. I think most now anticipating the cuts are coming, just a question of how many. But if I look at the 4-hour chart here, I'm assuming that anyone looking at this is going to recognize that, from the we got August 3rd lows here, it's just a raging uptrend. So it's easy to look at this and think, oh, well, of course that's got to retrace, right? Well, at least here this would be a 50% retracement. Here's your golden zone. Well, obviously that's coming. Well, of course, I'm not saying that it's not, and I can completely understand, right, as a retracement trader, the appeal of looking at that. Well, number one, if it's going to be a 50% retracement here, that's a pretty long ways down. That being the most common, right? Probably we can all agree that this is a very common retracement. So we've got the swing here, 50 or golden zone. You can see areas here of potential support. This here, right? We've got a fair value gap just beyond this is kind of what you'd be in your mind's eye anticipating. But you've got to recognize here that even still here on the 4-hour time frame, the trend is still up. So right now, to be thinking, oh, here it comes, right? We're going to go down to here's this big order block. We get this big fair value gap. To be anticipating, okay, it's definitely going down. You're ignoring what's right in front of you, and that is that we have a strong low here that produced a break of structure that gave us a new all-time high. So within this context here, even though looking at this like, whoa, look at this rejection here, it really looks like it wants to fall, until there is a close below this low, there's no reason for you to be looking. Well, let me rephrase that. Your bias must be to the high side until you get a close below this low. Again, this is the beauty of using an indicator like this, so that you're not lost in like, oh God, which side do I want to be leaning here? Is there some bias here? The only thing that you can say here with clarity, with objectivity here, if I just grabbed a box down here, is that down here, this is as good a potential entry as you could possibly hope to find. We have come all the way down here, wicked some liquidity, and we've stayed above the strong low here. Now, that of course, I'm not saying that we couldn't break the low here and that we head lower, but until that happens, moving from a 4-hour to a 15, then down to I prefer a 2,000 for my entry template. a 2000 tick, you want to be looking long here. Now, of course, when we look at things like this rejection wick here and popping into this fair value gap and then get rejecting, if it doesn't look right here, if you don't like the look of this, don't trade just because you feel like, well, shit, it's Monday, I got to trade. No trade is a trading decision, and often it's the best one. But if you're just determined to be putting on a trade here, you want to be looking long. You have been gifted with a retrace here. Well, this would be 786 with retraces where we're getting some wick rejection down here. Again, I am not saying that this isn't just about to do this, right? That we've got a swing, we got a retrace, and now we're going to head down here. We're going to break this low. But until we do, we have very attractive risk reward because this is the weak high. This is what your potential target would be. Not only is it liquidity, an area where we know there would be liquidity here, we know there's liquidity down here. So your risk reward, do I have to show it to you? Right? It should be quite obvious to you. Much better risk to the upside. Now, if you've got to do a little math here and say, okay, well, am I willing? Do I like this enough here, looking at this 4 hour, to take the risk to allow for a close below this low as my exit? Now, one thing to note here: this fair value gap has already been mitigated. Right? So to think, oh, well, that fair value gap hasn't been closed. Easy with that thinking here. This is we're a couple of ticks off the midpoint here, which is enough to mitigate that. It is. Now, again, I'm not saying we're not going down, right? There's no knowing which way it's going, but we can use this objectively. So bias should be the long side. Now, let's go down. Let's just, let's keep that thinking in play here. Now, look at the 15-minute. Would that make you? Would you have any bias here? Anything? Well, there's the box I drew, right, of the area of liquidity here that we've now tapped multiple times. Look. Right. Swing. This is, we look at the volume profile here. You're just in a massive chop zone here. So don't feel like, oh, God, I've got to do something. Again, no trade is a trading decision. But here, do I have any particular, anything that I can lean into? I can recognize pattern or, we're not really talking about any indicators here, momentum indicators. There's really not much to see here other than a lot of chop. Now, the other thing you might do here, just, this is, I'm overlapping a little bit here, but if we just take the volume profile here and pull it out. Let's see if I can get that. Oh, it's just going to let me do that. You're going to let me, there we go, and pull it out here. Right, on a day like this where we have this chop, and very clearly a lack of trend, right? It's the 15-minute. Again, it's just chop. On a day like this, if you can't resist the trading, perhaps looking for something to go from the lower end of value to the upper end of value, because you can kind of see that's what the market's doing. Yes, we've had some wicks that went extreme, but look at the rejection on that wick. Now we kind of see it here, right? So if you can't resist the trading, that might be a way to look at this, but now you're essentially trading off of the volume profile, right? And market structure is really not a factor in that determination. Now, some of you may be using volume profile, some not, right? We're trying to stay focused on the market structure. But note here on the 15-minute, the strong high is above, the weak high is below. So I have a disconnect between the two, the trends between the 15 and the 4. 4-hour trend is up, 15-minute trend is down. We want to try and trade when we get them all in sync. So no trade is a very valid decision to make here on this Monday, and that may well be the case. We'll likely have some trend throughout the course of the week, but now I've got a disconnect between these two. They are not in alignment. Very reasonable to conclude here. No time to be trading. Now again, if you just can't resist it, let's go down to a 2,000 tick and see if we can take that same bias and make it work. Now here, just begin, because I'm trying to not overwhelm you with too many indicators, just stay focused on the market structure here. This is, it's pretty ugly, right? So whether we're looking here at the IB high to the IB low, the additional thing I have on here is VWAP with a 1 standard deviation on either side, which can be a very nice proxy. Often you'll find that they'll overlap. For those of you who may not, you're not referencing a volume profile. Some of you may, right? It certainly wouldn't hurt to put a volume profile in here. But often the volume area high and the value area low of a volume profile will be very, very, very close to 1 standard deviation from VWAP. So you can kind of see what's happening here. we get right up here, we get to the IB high at 1 standard deviation from VWAP, and what do? We go down to the 1 standard deviation, we sweep the pre-market mid here, then we're back to VWAP, then we're back down here. Now here's the IB low being swept. Now we're back to VWAP. Now we're back here, back to VWAP. Now we're back down here. Now this is the kind of thing you might be looking for. Remember, our bias is to the long side. So if I were to just to make this easy here, let's take a line here and put it right on that low. So I'm going to see it. So over here on the 2000 tick, this is where I get a trend change. Remember, it's got to be a close below. So while we're in this long bias here per the 4-hour, which we're going to use for our trend determination, I've got a disconnect on the 15. 15 just looks horrible, right? You can just look at this and say, well, it's not a great trading day. Let me get that thing out of there. Okay, now what has just happened? One thing that often you can use when you're down to the lower time frames for some clue of liquidity, right? We always want to be considering where was liquidity last taken, and often you'll see this. This can be helpful with using the fractals. The market likes to move in. Well, you've seen me talk about this for 6 years. Market likes to move in this pattern here: swing, retrace, push, right? That is the heartbeat of the market right there. It's the foundation of the measured move algo. It's really all you can do. You've heard me say this many times. It's all the market can do. It's all we can ever do. We get a swing, high to low. Now, which side's going to break? This one or this one? That's it. Every trading decision you've ever made can be broken down to that. Which side breaks? So we want to look for this, recognizing that that's how the market likes to move. Not always, not 100% of the time, but we can look for this kind of pattern here over and over as a potential for a finishing pattern. So if we look at it here, we get a fractal down here. So here's a swing, I get a fractal here. Here's a retrace. Now I go up here, I get it leaves a fractal up here. But look where I am. I'm in the middle of a fair value gap, just beyond an order block here, at the IB high at 1 standard deviation. Now, that's you might look at that and say, well, whoa. I'm not sure I want to sell that. The trend's going up. What if it keeps going? Well, what if it keeps going? Of course, if you're looking to be on the short side here, you're going to take a loser. Now, one thing to note here, and you want to look for this, whether it's you're trading on a time-based here or a tick-based chart here, like I prefer. We want to be careful about trying to pick a turn when the market is one time framing, which is just a fancy way of saying no highs. In this case, if we're coming down, we don't know we have a pivot until one of the highs is taken. So as we're here, you can see it over here. We just went through this here. It's just down. Here, there was an order block right here. You're at VWAP. But there's nothing here to say, I can just take a long here. Because note, the highs of these candles are still not broken. Now, we've just broken a high here, and we did it right into this fair value gap. So as we look at this now, here's the move, right? Remember, right? That's the only decision is now which side breaks first, right? Is it going to be this one or this one? Well, we left a fractal here. We left a fractal here. What we would hope for, right? The perfect setup would be this. That would be perfect. Now, of course, looking for perfect in the market. That shouldn't be your objective, right? If it happens, great, right? But it shouldn't be like, well, if it's not perfect, I'm not. It's not what I'm trying to say. What I'm trying to say here is now I've got a little consolidation here. I've had a push down here. I've had a little change in the state of delivery here because now I've taken out these highs. So thus a fractal forms down here. So here's the high, here's the low. Of course, you've got a little 21 EMA on here, which can be useful just for short-term trend. VWAP right in the middle. Now, which side would you anticipate is more likely to break? Well, I'm not saying that it would be easy to determine that. What I'm saying is that I've got a strong low down here. Remember, we drew this off of the 4-hour. So if I can get into something, come back here. If I can get into something like this, retrace here, I know I've got an order block here. Now I'd be looking for something like this, but of course I'm not anticipating we're going way up here. Look where 1 standard deviation is. On a day like this, you've got to be comfortable with lower targets because we don't have trend, right? And we know why. We can understand why the market is not trending today. Now, one tweet or X or one truth or that doesn't take much to change the market here these days, right? Because Well, I think you all understand why. So you've got to be very disciplined with the money management here. It should be a very fixed amount in your mind in terms of what you're going to risk, particularly on a day like this where there's so much chop. But my bias is to the long side because this is the important low. So can I take a trade here right now as we're hitting the pre-market mid, and we've just again visited the IB low, which I will remind you as often as I can. The two most important levels on the board, day in, day out, right? Here's the first. Here's a Madonna trade here. We have not yet tapped it. Note it's still green, right? So we have not had a challenge of the IB high. But look at this pivot sitting up here. Can you see how that's just potential liquidity waiting to be run? It's kind of the same thing here. Now, if I'm looking at this right now, I've had the change here. I've gone into this fair value gap. I'm retracing now. I mean, the trade here shouldn't be, well, let's go to the stop. Shouldn't be all that hard to construct. Something like this. I'm on the micros here just to keep it simple. Let's try and get, there's about 3 to 1 there, right? So, okay, you're trading micros. You don't have to trade a single micro, right? Just for demonstration here. Okay, right. I mean, clearly here, if this fractal gets run, I don't want to be in this trade. If it holds, and I've got the ingredients here, I've got what I'm looking for. I've got the swing high that broke. I've got the swing up that broke those highs, went into a fair value gap. I'm retracing here. I'm now at 1 standard deviation from VWAP. I've got some challenges to get above here, right? Note the 21 EMA is sloping downward here. At the moment, I've got negative cum delta down here. Again, just not to overwhelm you with indicators, but this is all I'm looking for, right there. Very limited stop. Right now, you trade an 8 or a 10 lot, right? If your micros are like, oh, micros are for pussies, right? I rethink that, right? The micros are for all of us, right? So much more flexibility than trying to get in here, particularly on a day like today, where you've got all of this chop. It's so easy to blow through $600, $700, $800 here in this kind of chop. Trading the full size here, right? Now we got a trending day. Okay, I will go back and forth between the two. In fact, I keep both open at all times, depending on the kind of day that looks to be shaping up. Day like today, I'm going to trade micros. So look here, this is just such a small amount of risk. It's a $10 of risk on a single. So okay, if you want to trade a 10 lot, trade a 10 lot, right? And risk $100. But understand why. Why would you be looking here long, right? So, again, the one common mistake that I'm trying to articulate here is not paying attention to the higher time frame, which gave you this bias like in your face. Like you would literally have to look at the chart and go, well, I'm going to ignore that. I'm going to ignore the fact that this low created a break of structure here. I'm going to ignore that because it sure looks to me like it wants to come down. Start on the 4 hour, or it could be, it doesn't have to be the 4 hour, it could be the daily, right? I go from a 4 down to a 15, down to a 2000 tick. That's just my preference. That's what you should use, just what I prefer, right? After many years of doing this. Okay, right, again, no trade is certainly a conclusion you could make here, but if nothing else, God, look, here, I'll do it again. If this is your stop, and your entry is going to be about here, well, at, again, micros, let's get to, where's 3 to 1, which is always a good target. Okay, well, can we get back up here towards the week high? Maybe not today. Maybe overnight, maybe tomorrow, or maybe this low breaks. But which way do you want to be looking here? It shouldn't be a subjective decision. It should be clearly the bias is to the long side. Now, today, it's a little tricky to translate that into, oh, well, clearly I can see over here, because, again, I come to the 15-minute, and it's just it's just radio waves. So maybe today's not the greatest day to be putting a lot of capital at risk, thus micros, right? If you can't resist the temptation to trade because you're a trader and you've decided now that means I got to trade every day, go to micros on something like this. And try and use the statistics. Now here, well, this may get stopped out right here. Okay, stopped out. Okay, well, so be it. Next trade, very small loser. I can live with that, right? That's not a death blow. Whether you took a 10 lot or a 1 lot. Okay, didn't work. Now, Is this a liquidity grab? Certainly could be. Again, now look, I've just got 2 candles here in the 2000, but there's nothing to suggest that I've got a low until I get a fractal here. That will maybe that's easier way to look at it. I got a fractal here. Well, now this has been wicked. Okay, is that a liquidity grab? Certainly could be. You'd have an order block down here, this last down here, or you can even think of it as congestion. Okay, so now I got a little liquidity sweep here. I might go again at that, right? Because remember, my stop now would be here. So if I'm here, and again, I'm going for 3 to 1, I'll push back to VWAP. See, don't give up on the idea. Just no shit, I got stopped out. Shit. Well, I guess a long's not going to work. It just means that the first one didn't work. Okay, well, are the ingredients still here? I've had a liquidity sweep. Now that's positive. I've swept the IB low. There's an order block here I could well be reacting in. Now my bias, again, until this low is taken, is still to the long side. Hopefully that helps. I know I kind of went over a lot of little components here, but it really all comes back to what's happening over here. Where's the strong low? Where's the weak high? That should set your bias. So that takes off so much pressure off of which way do I want to be looking, and it's so simple. So simple. Now, I can feel this looks like it wants to come down, but you got to wait until it breaks the strong low, right? Or then you're not trading the market. You're trading your own personal bias. You're trading subjectively, not objectively. And that's the big mistake that I think people make with market structure here. That, just to reiterate, right? And plenty of people teach you the same thing. This is just my version of trying to teach you that same thing. Look for when they're all in sync. And if you this just keep in mind that you look at something like this on the 15-minute. Don't be afraid to say this is not a great day to be trading. This may not be a great week to be trading. Okay, guys, I'll leave it there.